Hey Cougars, welcome to Business 110. This is Mr. Franklin here, and in this video, we're going to talk about insurance. So keep in mind that insurance is always changing and that we're talking about it from an educational standpoint. If you seriously need to get some insurance, you should talk to an insurance agent. You should talk to someone who actually knows all the ins and outs, because each person's situation is different and affects how things actually work, but we're going to talk about it in terms of generalities. So we're going to we start with life insurance. We're going to talk about health insurance, car insurance, and just talk about what insurance is in general. So first and foremost, insurance, as we talked about in a previous video, is a way to manage risk that maybe you can't manage on your own. So for example, if you're in a car accident and your car has $10,000 worth of damage, most people just could not absorb that cost. Okay, so we pay insurance and we pay $100 a month. I can pay $100 a month so that the insurance company can absorb that 20,000, because over the long term and over a lot of number of people, it kind of balances out where the insurance company has to make a profit, right? So they're not going to be totally losing money, but people are also getting taken care of in case that emergency happens to them. So that's kind of the idea behind any insurance, is minimizing a risk that it would be on a normal situation would just overwhelm or be unable, you would be unable to take care of. So life insurance. So life insurance, remember, is the insurance where you have left someone behind and what do they have to take care of? And it could be as simple as it's going to cover burial costs, funeral arrangements, medical stuff, lawyer to sort out all the finances. It's going to cover those costs. That may be all it needs to be. If you have dependents, it probably needs to be a lot more than that, so that they can have a way to pay for the house, to pay for bills, to take care of kids while that spouse or whoever it is no longer present. So that's the purpose of life insurance. So generally there's two types of life insurance that are sold. Most people will recommend nowadays, I think it's actually fairly common practice to recommend term life insurance. Term life insurance is you're going to pay a low monthly payment. So for example, it could be anywhere from $6 to $25, but it's going to be a low monthly payment and the coverage is going to be 100,000, 200,000, something like that. Now, you can usually, like, for every $100,000 you want to increase your policy, you add more money. So for example, if you're paying $20 a month to get $100,000 in coverage, you might be able to pay $40 a month to get $300,000 in coverage. Okay, so that's kind of how it works. But you're going to pay a little bit a month for this big life insurance payout. Okay, the other option is called whole life insurance, and in financial advising and insurance circles, this is still pushed, and it's pushed partly because insurance agents get paid a commission a lot of times, especially if they're a broker, on what kind of insurance they sell, and they would get paid more for the whole life. But whole life, you pay a larger monthly amount, and it generally actually has larger coverage than term life in general. And you can withdraw money that's accrued in the whole life insurance account. So with the term life, you send that money, you will never see that money unless you die and they pay out the life insurance. Okay. Whole life is, the whole idea is it builds up and it's kind of an investment thing. It's a bad idea for an investment, because generally the interest rate that you get on that is much lower than if you could put that into the stock market. And in an upcoming video, we're going to look at what that could be. So most investors and most investments deliver a larger return on investment than whole life insurance. So most people, modern investors, financial advisors like Dave Ramsey, the financial guys, they will recommend term life, because you're going to get that coverage, that protection in case of your death, but you're also able, instead of paying $100 for the $200,000, I'm only paying 20. Well, I can take that other 80 and put it in my own investment and make more money that way. Okay, that's kind of the idea behind that. Now, When a company is deciding whether they can insure you or not, they look at your age, your general health, and they determine how much that's going to be. So there are people that study all these numbers. Okay, if you like numbers, that might be a job for you to look into. But they study how all of this works and how much risk the company is taking by insuring you. So how do you get some? Most employers, we'll talk about this much later, but employers will actually negotiate on the behalf of all of their workers. And because they're negotiating for a large amount of people, they can actually work out some really good deals with insurance. I know Steel Canyon is one that has some really good insurance. You go to an insurance agent or broker. So, and you can call any of the places. Some insurance agencies focus on a certain type or another, but most of them, they diversify their portfolios, what it's called, where they offer house insurance, car insurance, life insurance. So just ask, and they might say, no, we don't do that. But we know someone who does. That's often how they work. Okay, so you can also just Google life insurance online and find some, and do some research.